Hello everyone, I am Maneesh Dangi. I head the fixed income team of Birla Sun Life Mutual Fund. I'm a co-CIO and head of fixed income with Birla Sun Life Mutual Fund, which is one of the largest fixed income fund house in the country. Basically, a fixed income essentially is for a common investor akin to fixed deposits. It displays the stability of a fixed deposit in terms of the kind of returns that you can get over short to medium term. You have a variety of fixed income products. You have funds like liquid where you could invest for very short term and earn somewhat better than what you would earn in a savings deposit. You have ultra short term and short term funds where you could kind of invest and earn more than potentially you would earn in 1 to 3 year fixed deposits. You also, of course, have credit risk fund and dynamic bond funds, where the returns could be somewhat more volatile than fixed deposits. But if you are invested for long periods of time, you kind of could expect a significant delta or the difference between the returns you would get here vis-a-vis fixed deposits. So in a sense, when you think of fixed income funds, you must anchor or you must think of fixed deposits. But then this is where the similarities end. In terms of returns, they are similar to fixed deposits, somewhat better. But from the point of view of other aspects, they are different and better. How? Fixed deposits are when you invest in a bank, you kind of take exposure to one bank. But when you invest in a fixed income fund, you actually buy hundreds of securities, hundreds of banks and good companies, AAA and AA and A-rated companies. That is what you get when you buy a fund. So even if you invest 1,000 rupee in our fund, you effectively tend to invest in hundreds of such companies which are actually there on a fund platform. That's one difference between a fixed deposit and fixed income fund. The second is, of course, the liquidity. When you invest in a fixed deposit, you're locked for a long period of time. Maybe for 1 year, maybe 2 years or 3 years. But in fixed income fund, liquidity is on tap. What it means is that if you invest today, tomorrow you can withdraw. So therefore, it gives you a lot of liquidity. And first I said that it's also supposed to deliver you better returns, but also there is a significant advantage on fixed income funds when you invest for long term, that is for 3 years and above, because much better tax treatment is available to you. And you can talk to your advisor or actually look for some research as to how different the tax would be to the fixed income fund return versus fixed deposit. So these are the three major differences between fixed deposit and fixed income funds. Remember, diversification, so you're investing many companies at one go. Liquidity, that is, you're able to exit at one go, as and when you want your money. And of course, third and most important thing is that the tax shield, the tax treatment to the fixed income return is much lower than in the fixed deposits. So these are the differences and superior characteristics of fixed income fund. We at Aditya Birla Sun Life manage all sorts of fixed income funds. They are liquid funds, as I said, ultra short-term fund, low duration fund, short-term fund, credit funds, and dynamic bond funds. We've been managing your money and investors of your kind for more than 2.5 decades. And we've been amongst the largest fixed income fund for a long time. We manage at this point in time 1,70,000 crore of fixed income funds across various categories. So when you invest in any of our fund, what you get is the capability of more than 20 analysts and portfolio managers who kind of strive to earn superior return than not only fixed deposits but other fixed income funds consistently without taking excessive risk. And therefore, you should look at our funds favorably. We hope to deliver superior returns to you consistently.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.